Hello. What's up, everybody? It's Yoshinator195 coming at you with another old school gaming commentary video on Call of Duty Black Ops 6. And in today's episode, should I be investing in ETFs? I'm going to switch it up here and talk a little bit about finances in terms of what you should be doing with your money, or if you've been thinking about investing, what are kind of some smart ways to do so. And let me preface this, I'm not a financial advisor. And if you've come across this video, you may have seen a lot of different articles or something on Google. Basically, there's a very famous document called The Lazy Uncle's Guide to Investing, or something, on the John Bogle strand of logic, where you basically invest in what's known as an ETF, or an exchange traded fund, which is basically a bundle of stocks that you buy in one go. And kind of thinking about, is this the smartest use of my savings if I'm interested in investing? And I'm not talking about if you have other bills like a mortgage or you're paying rent. This is kind of money that you want to build as a portfolio. And I guess to answer that question, long-term wise, and probably the short answer is most likely yes, you should be doing this, especially if you're very young. And that's one thing that I would kind of almost not regret, but I wish I did it younger, when I was like 18 to 23. I think I learned about ETFs when I was around 24, 25, and then started kind of beginning my journey in investing in them. And for the most part, I think all my ETFs that I've purchased since then have kind of gone on in the long term to give me some sort of profit. And that's historically why they work so well. So the pros of ETFs, if you want to kind of narrow it down, is that essentially it's historically you're playing the long-term game. You buy this kind of type of share, not with the expectation that you're going to get something quickly in the next year or so. Definitely like a multiple year kind of horizon. And the reason why they kind of work is essentially the best ETFs are the ones that kind of track like some sort of index, typically that's like in the top 200 or top 500. So again, what I mean by that is you're buying like a share that is kind of from this particular investment fund that is then themselves owning 200, say, different companies individually. And there's different markets out there, or how the funds work, but let's say they are investing in the top 200 companies. Every year they're owning the top 200 companies of, say, the US stock exchange. And now you're buying kind of a little share that's kind of tracking that fund and its progress, its performance, that's kind of relevant to those 200 shares. It's kind of like buying I guess a basket in one little slice, except, they're really pulling all together, multiple investors and millions of dollars from the profits of their own companies and their funds to them continuously buy more and more shares. So it makes it very easy. So it's just so simple, automatically diversified. If you buy something that's the top 200, you're not picking and choosing single shares, which is kind of the beauty of it. So you're buying a slice of this bigger basket that's filled with all these stocks. And I think generally, if you're interested in something long term, they might be the best way to do so because of the historical lower risk, and you're basically betting into kind of humankind in the sense of the performance of the market, the top 200 companies. And I think there's multiple books on it, but historically the market has always just continued to grow. Humanity has always created some amazing companies, and they've done well, and growth has continued slowly but steadily to increase. This may have gone down every now and then, and there's markets dips and fall, but through big crashes, through big pandemics, anything, the market continues to go so long as humanity is still around. And it's a very kind of passive, set and forget, low fees. Those are kind of the pros. Some of the cons to take into consideration is that, well, you are still kind of tracking the market, but you won't necessarily beat it if you are the market, if that makes sense. But chances are you will beat a lot of people that do active investing and trying to kind of pick and choose their own stocks, because they have to really focus a lot more on timing, getting it right, knowing when to sell when it's high, which is a really difficult thing to do, and I'll go into another video, and knowing when to kind of buy in at a particular crash, and then they have to kind of endure a little bit more emotional reaction to the market. So if you're emotionally prone to thinking like, shit, what the hell's happening in the market? I need to sell. That's not what you want to do with ETFs. You just got to hold them through thick and thin, let the kind of wave just pass. They are kind of less exciting than stock picking, and they do require kind of patience in terms of like, don't expect something in the next 6 months or so. If you're doing day trading, if you're trying to find like something, a quick rich scheme, ETFs are not the way to go. So I definitely recommend them for like lower term risk and a longer term horizon, because they're just so like easy. Like every ETF that I've purchased, particularly the ones, if I had to recommend something, is from the Vanguard portfolio, but there's a bunch of them that just track like the top 200, top 500. Things like VTS or VEU or VGS, different markets from like the US to Europe to maybe the Asian Pacific market. There's just like, they're so simple, and like I've been so happy with how little effort that I had to do, but the return on them is just fantastic. So I think you're aiming roughly between like 10 to 15% long-term risk, long-term plan of an annual return, and that kind of compounds over time. But they're not the most exciting, so they can feel kind of slow or boring. And if you really did want to have some individual shares, that's like a whole other ball game, where you have to be wary that, you are kind of almost gambling, or you are literally more gambling in that sense, and owning things like even like Apple or Microsoft or Google. They're kind of, I guess, a little bit more exciting and interesting. You kind of follow the company, especially if you really like that company, you're kind of really literally invested in them and emotionally invested in them. You're kind of interested to see what they're going to do. So that can be a whole other ball game, and I'll go into a video of that, because with ETFs, you don't want to really watch the news and kind of find out, like, you don't really care. Like, you just check it every now and then to make sure, well, is humanity doing well? Like, are we generally okay? Or is the US okay, for the long term? Do I believe that humankind can create more companies? And I think, that's the kind of the way to go. If you have absolutely pessimism to the nth degree, and you're just a nihilist, then I don't know what you're doing here. What are you investing in? But, ETFs generally are like safe, low risk, and very low fees. And hopefully, if you do some research, you find the ones like Vanguard that have the low fees. Tend to, you want to avoid ones that have higher fees, because it kind of defeats the purpose of owning the ETF, and just enjoying this kind of passive long-term horizon. And over like a year or two, trust me, the feeling that you get from seeing like the gains incrementally, it's just like, it's amazing. So anyways, I'm going to wrap it up here, short video, but let me know if you have any questions about ETFs or which ETFs you're considering. Hope you enjoyed this different kind of gameplay. It's been so chaotic, this one. I mean, Hardpoint, this is actually from an 18-minute gameplay footage. It was an insane game. I remember this, and just, I think Hardpoint is one of my favorite game modes, and I do miss it. But that's it for me. Thanks for watching, and I'll see you in the next one. Peace.